It's Sunday evening, October 4th. I'm doing some research to prepare for my week. I found a nice trade. I want to share it with you. So, we've got the market pulling back just a little bit on Friday. The news, obviously, with President Trump having the coronavirus, rattled the market a little bit. Also, there are a number of senators that are also inflicted with the coronavirus. So, any stimulus bill may not be voted upon until these senators can get back to Congress. Any postponement in that stimulus bill is not going to be viewed very well. Even if those congressmen were in session right now, it's still been a back and forth. Both sides are still far apart. Day to day, the market is just waiting for a decision. That's all it really cares about right now. And we're seeing back and forth choppiness during the course of the day. Market sells off, hits an extreme, buyers come in, market rallies up, hits a resistance level, and then we repeat that cycle during the day. You can see in the course of the last 5 days, all we've been doing is chopping around right around that 50-day moving average. I suspect that after this bounce, that we are going to try and drift down a little bit, find support, probably will come into play above the 100-day moving average, and then the market should be gradually able to recover from that. Hopefully that'll coincide with President Trump getting healthy and the senators getting healthy, everybody coming back into session and passing a stimulus bill. So we know that economic growth has been stalling out because of the second wave of the coronavirus. We saw a fairly soft unemployment report on Friday. ISM manufacturing was down a little bit. So we need the stimulus bill to kind of kickstart the economy. I still believe that that 100-day moving average is going to hold. I still like a number of stocks, so this is a good opportunity for us to sell out of the money bullish put spreads. I'm going to be focusing on companies that have a tendency to rally into their earnings and that will be posting fairly soon and that currently have relative strength. So when I put all of those check marks in my favor, my probability of success goes way up. And that's what I need right now because the market's not giving me a whole lot to lean on in terms of direction. So, what I did was I ran a search and I'm looking for good option liquidity, weekly options, because I want to make sure that I'm selling option premium inside of a 3 week window. I want to take advantage of accelerated time premium decay. That's why I like to keep my trades very short term. 3 weeks is the most, 2 weeks is optimal. So that's what I'm going to be looking for. So I put in earnings date from October 19th. This gives me at least a couple of expirations to work with through November 7th. So these are the candidates that came up. And I also wanted to make sure that I had some decent volume on Friday. That might also help me filter out some of these results. And let's also mark strength versus SPY. And now we only get two results. Gee, that didn't take long. Let's take a look at one of them because I like it. I'm going to double click on McDonald's. You'll have to excuse the last bar here. We're updating our data right now, so we get 2 bars for the last Friday. You can see we had a really nice bullish engulfing pattern on Friday. Great sign of strength, excellent volume on McDonald's, small upward sloping trend line right here. We've got the 50-day moving average coming in at this horizontal support level, 1, 2. Nice horizontal support level. We find a higher support level above this one, which is also good because this would be our first line of protection right here at above $213 on McDonald's. A little bit better support right down here on the 50-day moving average, which comes into play at around 211.85. So we're going to bring up the option chain. And if I put this chart back up, you can hover over the E and you can see the earnings announcement's going to be on 10/27. So we want to make sure that we pick an option expiration date that is before that. That would leave us with October 23rd expiration, 2 weeks. That's good. We're going to go down to that 212.50 strike price, and that's where we're going to be looking to see what we can get there. And we're going to be clicking on the $210 put. So that would be our put credit spread. We're going to be selling the October 12.50 put, buying the October 210 put. Expiration's October 23rd. Because we have $2.50 between the strike prices, we're going to be looking to get a 50-cent credit for this. Well, we can see off screen that it is 9 cents bid, offered at 69 cents. So we're a little bit on the ask side on this one. So we're going to need the stock to pull back just a little bit on Monday, and then we'll have an opportunity to get filled. If you don't get filled on this spread in 2 days, by Wednesday, cancel that order, because you don't want to be filled. We're expecting time decay to tick, 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 eat away at that option premium. And if we're waiting 3 days to get into the trade, now all of a sudden the stock has to have pulled back pretty materially for us to get filled on it. We're just looking for a small dip on Monday, ideally. Boom, we get filled on this spread, and then the stock recovers and time decay starts whittling away at that option premium, and the stock continues to grind higher, because remember what the premise behind this trade, and one of the reasons that we believe it's a high probability trade, is that this stock likes to rally into earnings. We know that over the course of the last 3 years, this stock has had a tendency to rally into the earnings announcement once it is inside that 2-week window, which we're almost there right now. So I am expecting the stock to tick, tick, tick higher. I'm also expecting the market, maybe it pulls back a little bit, but I don't feel that I'm going to have the rug pulled out from underneath me. So those are the 2 caveats to the trade. If we see the SPY fall below that 100-day moving average and close below it, you got to shut down your bullish put spreads. That means that the market could actually go much lower. On McDonald's, if the stock pulls back and it breaches this 213 support level and it closes below $213, you also need to buy that spread back, because now this technical support that we've been leaning on will have been violated, and the stock would have a chance to actually pull back further. So make sure that you're watching the 100-day moving average on the SPY. That's one of your constraints for shutting the trade down. The other is we want to see McDonald's stay above that $213 level. As long as the market's just chopping back and forth, I'm expecting the McDonald's to move higher into the earnings announcement. So that's a trade that you might consider for Monday morning. If you like this content, please give it a thumbs up and make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss these videos. Thanks so much, everybody. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.